It's another interesting edition of the Market Review, and today, Thursday, 20th day of August 2020, we'll continue our conversations, and today looking at the commodities market. Let us give you a lineup of what we'll be discussing. First, look at the FX ACI weekly review, and the fact that the scarcity of key commodities in Nigeria could cause a price surge. Nigeria and the cocoa rally will also come under our review today, and an interesting story that those who are called the islanders likely to pay 20% more for a basket of tomatoes than the mainlanders. And where else are those two categories except in Lagos, Nigeria? That's a report from the Financial Derivatives Company that we'll look at in this program. And an interesting fact that there are opportunities to trade precious metals in Africa for beginners. You would like to know that. So we'll give you that insight in this program. Let's begin with the FX Commodities Index Composites analysis for the previous week, which dropped slightly, indicating the third week of marginal price movement. With anticipation of the new harvest season, the frequency of trade on the exchange dropped as farmers are out of stock and warehouses are clearing up storage space in preparation for the new harvest season. Indeed, harvest time. Low trade volume often signal the waiting period between commodity cultivation and harvest. For the FX Commodities Index Composite, it experienced a rebound in market activity, averaging 262.97 points in the week under review. The index performance fell by 0.41% week on week, primarily due to the negative market performance in the maize and paddy sub-indices of the exchange against the previous week performance. On the exchange, maize and paddy rice dropped by 0.10% and 4.85% to close the trading week at 172,500 metric tons and $909,192,795 per metric tons. Sorghum, soybean, and ginger, however, maintained their price levels in the week under review, while cocoa dropped by 0.73%. So that's the analysis for the previous week activities in the FX covered commodity index. Let's get on to that story and fact that there is the potential of a surge in food commodities and prices. And why is that? Because of the developments we're seeing in the markets. Let's first give you an index in terms of the market summary of activities so far covered and published on ProShare, Nigeria's leading financial information hub. It first identified the fact that the local market activity increased in the previous month, that's July 2020, for maize and paddy rice, resulting in a double-digit percentage price increase, with the market activity of maize being the most pronounced amongst the commodities of focus in the current crop season. This was complemented by the declining volatility in the open market across all commodities, while the exchanges saw volatility decline for maize and paddy rice. Price stability was pronounced in the international market for maize and soybeans, leaving volatility neutral month on month, while paddy rice increased marginally by 2 percentage points. The open market prices for all three commodities witnessed gains in response to the lean season of the crop calendar in the agrarian north, which indicates a continued depletion of market stocks from the last planting season, which was terminated in December 2019. The current narrow supply has resulted in policy response by the Central Bank of Nigeria, which has stopped the provision of scarce foreign exchange for the import of maize. The exchange executed prices for the month under review increased considerably for the maize due to transmission effects from commodity scarcity. However, the exchange prices were collectively lower than the physical markets for comparative commodity grades being offered on the exchange. Paddy rice price eased considerably on the international market as a result of optimal production output, which is bound for a record. This is despite the market impact of COVID-19 in local markets, which center around sluggish demand and the slow recovery of logistics operations, which provide access to food. In terms of the market perspective on the concerns of surging commodity prices, the report focused on the average monthly price, analyzing three key indicators: price variance analysis, volatility analysis, and price seasonality performance analysis for maize, soybeans, and paddy rice across crop endemic zones in Nigeria and the international markets. Looking at the open markets, commodity prices increased further in July 2020, sustaining the season's upward trend, which was cumulatively most pronounced for maize. Soybeans, in terms of its average monthly price, sustained a consecutive 5-month price increase in the open markets. The average price tightened by 8.6% month-on-month, its highest monthly price gain this season. The crop cycle is currently at its mid-season, which will be terminated by harvest, which commences in November annually. This indicates ongoing depletion without replenishment of market stocks. In addition, the seasonality performance for soybeans showed a year-on-year price increase of 11%, which is 17 percent points in terms of analysis, comparing that to June 2019. Volatility has declined for commodity as it recorded its highest drop month-on-month from the start of the commodity season to 5% in July, which is 14 percent points. The seasonality trend shows a year-on-year decline in the volatility for soybeans, easing by 4 percent points in July 2020. In the case of maize prices have consistently increased from the start of the commodity season in December 2019. It experienced an 18.83% price increase month-on-month, which can be translated to 8.5 percent points. Remarkably, the highest net negative monthly price gain this season for the commodity. The seasonality performance for the commodity increased by 93.9% year-on-year, which was translated to 436.1 percent points in comparison to July 2019. This difference in market performance is due to pent-up demand accentuated by the lean season directed to the markets as market demand grows. Volatility declined to 5%, which is approximately 17 points month-on-month, comparing the volatility of July 2019 with July this current year, 2020. And that shows that the open market prices were more stable in previous year than this year by a 19 points margin. Paddy rice price increased by 13.2% month-on-month, thereby maintaining a 3-month consistent price increase from March 2020. The market seasonality performance surged to 39.9% year-on-year, which translated to 24 percent points, over a clear double in comparison to May 2020. Paddy rice price was the least stable month-on-month compared to maize and soybeans. The average volatility was 8% in July, which was 1 percent point month-on-month, while the seasonality trend revealed better price stability in 2020, which showed a decline in volatility, decreasing by 88 percent points in July 2020. In essence, the exchange experienced a relatively lower price when compared to the open market for maize, soybean, and paddy rice in July 2020. The month average executed prices on the exchange for maize, soybeans, and paddy rice increased month-on-month by 26.9%, 14.6%, and 5.3% respectively. The month-on-month volatility declined for maize and paddy rice and increased for soybeans, maize, which was 7%, that's 63 percent points, soybeans 18%, 9 percent points, and paddy rice 9% and 6 percent points. The seasonality trend of the volatility revealed a year-on-year increase for maize, which was 1%, soybeans 18%, and paddy rice 9% volatility. When we look at the international market, the maize and soybeans price gained marginally in July. Soybeans increased by 2.3%, while maize increased by 1.3%. That is based on the month-on-month analysis. Paddy rice average monthly price eased by minus 10.7% due to seasonal pressures from harvests. The commodity market supply from South America is seemingly bolstering the market stocks and is predicted to surpass last year's output. But indeed, economic contraction still poses a direct threat to market demand uncertainty, an outcome of the global COVID-19 pandemic. Market supply remains strong as production continues to increase in South America for maize and soybean, and supply for paddy rice remains strong from India and Thailand. Volatility increased marginally in July for paddy rice to 23%, which is 2 percentage points, and maintained a neutral change for maize at 4% and soybean at 3%, indicating a good level of price stability. In terms of the Composite Price Index Monitor, which is courtesy of the FX Commodities Index, the composite opened at 245.6 points and had a monthly average of 250.3 points, a positive month-on-month performance as against what obtained in June 2020 to close at 251.1 points at the last trading day of the previous month. The season-to-date performance of the ACI composite at the last trading day of the month is positive, closing 86.3 points above the index opening at the beginning of the season. The year-on-year, in terms of seasonality performance, experienced 92.0 points, a 58.1% difference as against July 2019. In essence, when we look at the maize sub-index, it opened at 323.8 points and had a month average performance of 315.4 points, representing a positive performance of the sub-index against June 2020, closing at a value of 311.5 points. It therefore showed that the sub-index recorded a positive season-to-date performance on the last trading day of the month, closing 137.4 points, which is 78.9% above the December index opening, while the year-on-year performance experienced a 98.3% increase against July 2019. In essence, the maize price on the exchange was significantly higher when compared to July 2019. Very interesting insights on the price and an index, sub-index for maize particularly. Let's look at soybean sub-index. It opened at 213.2 points and had a month average performance of 234.2 points, presenting a positive month-on-month performance for the sub-index. It closed with a value of 238.1 points and recorded a marginal positive season-to-date performance on the last trading day of the month, closing 22.0% above the December opening of the index. The year-on-year performance experienced a 39.2 points uptick, which is 20.1% against that of July 2019. Some indicators to show you the price surge, but it's good to see how commodities activities are fanning out in the exchange. And again, we look at the facts of the macroeconomic effects on price and activities in the commodities market. In the light of the earlier plunge in oil prices and the resultant fiscal and external shocks, Nigeria is gradually expanding its revenue base using cash crops such as cocoa. Now, this is just to let you know that Nigeria is facing that cocoa rally, and we need to even know what this entails. Cocoa remains a priority area for Nigeria, as the country currently ranks the 5th largest cocoa producing country in the world. With a total output of approximately 300,000 tons, the country is behind Ivory Coast, 2 million tons, Ghana, 883,652 tons, and Indonesia, that has 659,776 tons in terms of production. Cocoa production in Nigeria was hitherto clustered in southwest states such as Ogun, Osun, and Oyo states. That's historically, and that's what has been happening. However, southeastern states such as Cross River are also tapping into the export potential of the commodity. The Cocoa Association of Nigeria, CAN, is targeting an increase in the state's cocoa output to 100,000 tons by 2028, from its current output of approximately 55,000 tons. The country has set a similar target to boost Ondo State's output to 100,000 tons in the 2020 to 2021 season, from the current 77,000 tons in the previous season. As an oil-dependent economy, Nigeria's economy was severely affected by the slump in the global crude oil price. This has forced the country to seek to revive its agricultural sector, which was the cash cow of the economy prior to the oil boom in the 1970s. Given the recent adjustment of the official exchange rate to 279 naira to $1 and the rally in the global cocoa price, Nigeria stands to enjoy increased export revenue from higher cocoa output. However, as other African countries such as Cameroon intensify their cocoa output, there could be increased competition in the global market. There is also the risk of smuggling, especially with the price of cocoa increasing at the ports of Cameroon, which borders Nigeria on the southeast. Nigeria must therefore ensure that its cocoa output is competitive in both price and quality terms. And I would add that it's also an opportunity for us to reinvent ourselves in the agro space, because cocoa was a major revenue base for the southwestern region and what was utilized to build major infrastructure in the southwest, from the capital then, Ibadan, to Lagos and other parts of the region, including institutions, all got derived revenue from cocoa. So yes, we can get it back on board and it can become another huge source of revenue for the country. From the stable of the Financial Derivatives Company, published on ProShare, Nigeria's leading financial information hub, if you are a Lagosian, then you need to take this summary seriously. And it says that if you live in Victoria Island, Ikoyi, or Lekki, parts of Lagos, you're probably going to pay 20% more for a basket of tomatoes than your friend who lives on the mainland, whether it's Ikeja to other parts of the mainland. Well, this does not apply to open markets like the Sura market, for those of you that know Sura, and Onyigbo markets, but also the supermarkets. And of course, in a recent survey that FDC carried out, partnering with the Channels TV, they sought to examine the degree of price discriminations across markets in the Lagos metropolis area. And this was part of the major findings that they got. They found that location and transportation costs are the major drivers of the price variation. And so the price gouging is an extreme case of price discrimination where the consumer finds the price of a commodity unbearable and unfair. It is a characteristic of extreme situations of market imperfection. Luckily, gouging or cutthroat pricing is not that prevalent in Lagos. This is because the use of mobile phones and electronic payments makes exploitation of information asymmetry very, very difficult. But in terms of this pricing and the fact that people in the island will pay 20% more than the mainlanders, I know that those in the island now watching will be wondering what is really happening. But that's for you to further check on our website, www.prochange.com, to see those price variations and how it's going to impact you. I mean, tomato is a very good source for stew. So if you're going to make more stew and you're living on the island in Lagos, Marina down to Lekki, you have to plan it well because of the transportation costs, logistics involved, and what you're going to be involved in terms of getting those tomatoes and taking the whole value chain from it. So, some value for the mainland, as if I would say. You pay less if you're in the mainland area. Now let's go on to precious metals. There's been so much talk around precious metals and production. The opportunities for Africa. So we take this first tranche of a report published on ProShare, Nigeria's leading financial information hub, around precious metals like gold and silver. They are now being classified as commodities, which we know. Now, this means that their price is set by the market regardless of producers. The price is already set regardless of producers. Now, humans have been trading such goods for centuries. Don't forget, this has been part of the trade, global trade, precious metals. Today, it is possible to do it online. And all you need to do is have a device with internet access. I'm telling you about the digital economy. So gold and silver are traded via different securities. They are highly liquid, so buyers and sellers have no difficulty in connecting. Now, the range of opportunities includes spot trading. That's for those of you that are now looking at opportunities in precious metals. Spot trading is one. There's also the options market. There's also the futures of funds, including the exchange-traded funds. And the first two options are easily accessible in Nigeria, and here are their fundamentals. Spot trading, in terms of what it means, is like any other trading model. The system is based on exchange. Spot metals like gold or silver are traded against a currency. The most popular pairings include gold against the US dollar and silver against the US dollar. So for those of you that trade and pay it with the dollar, you take note of that. Precious metals have an important advantage over other assets. They are less susceptible to volatility, which means prices are more stable and predictable. They are also liquid worldwide and protected against inflation. So gold is valuable in any country, so finding counterparty for a trade is easy. Currency pairs have one major flaw. They react to a multitude of political and economic factors, so that's the risk when you trade metals against currency. In this regard, spot metals trading is less complicated. You do not have to monitor two economies at once. Trading on margin in terms of leverage, brokers have to enable clients to trade with larger volumes than their deposit allows. This means that your provider will add a share of their funds to increase your buying capacity and potential returns. While the arrangement is surely attractive, there is a catch. The risk grows along with potential profits, so leverage must be used with caution. You have to gain knowledge and experience before opening these boosted trades. Take note, knowledge and experience. Now, in terms of the competitive spreads on metals, spread is the difference between the price for the buyer and the price for the seller. Top brokerage firms offer tight spreads. This may start from 0.1 to 0.5 depending on account type. Clients should study pricing rules along with opportunities for limits and stop levels. There are convenient hours for trading, and the market for spot metals trading is awake 24/7. This means you are free to open and close your positions around the clock. In this regard, it is not different from the currency exchange. And also, it has an absence of expiry dates. Spot gold and silver have no expiry dates. This means that a position will stay open until you close it intentionally, and the only condition is that the margin is maintained. That's what you need to know. The opportunities for precious metals and utilization. Just to remind all market stakeholders that the first Virtual Capital Market Committee webinar is holding currently now via the virtual platforms and is the first for this year, 2020. It is chaired by the Director General of the Security and Exchange Commission, Dr. Lamido Yuguda. That's his first major meeting with all the capital market stakeholders, the first CMC for this year, and it's virtual as we continue to align with the protocols of COVID-19 pandemic. So this is done to once again respect the protocols of COVID-19 to ensure that everybody keeps safe. Attending the meeting are also key capital market leaders like the CEO of the Nigeria Stock Exchange, Mr. Oscar Onyema, the Group CEO of the FMDQ Group, Mr. Bola Nadele Koko, and also the CEO of the NASD Securities, the PLC, Mr. Bola Jomale, alongside others like alongside other market leaders in the market, including key trade groups leaders and dealing members groups and other stakeholders. We assure you from WebTV that we'll bring you updates from this meeting, and we've taken notes of this, and we'll give you subsequent editions, the key takeaways and the key decisions from this meeting. A very, very crucial meeting for the year by the apex regulator of the capital markets. Some of the key issues that we looked at are developments in the capital market, particularly the impact of the COVID-19 pandemic, and the way forward for the capital market, guidelines and rules that will help to foster a robust, dynamic, and innovative Nigerian capital market. So this is the first. We've talked about it, and we're glad that finally we're having the first one for the year, virtual, showing you once again how technology is enabling and driving the activities in the market. So we expect tomorrow interactions with capital market correspondents after this meeting today, and we'll get some of the key decisions taken. That session also will be anchored by Dr. Lamido Yuguda, the Director General of the Security and Exchange Commission. That will be his first interaction with the capital market correspondents since he resumed office as the DG of SEC Nigeria. Indeed, the commodities market also will be one space that we expect discussions around and how we can grow forward and make that required impact. And of course, the MD of the FX Commodity Exchange, Mr. Ayodeji Balogun, will also be in that meeting, and we expect also the interest, other activities of the market to be brought to the fore, the Nigerian Commodity Exchange and other key exchanges activities. Just to remind you that the Association of the Securities Dealing Houses of Nigeria, ASHON. They are working towards unveiling the Lagos Commodities Exchange and Futures Markets. We will be monitoring, and once that is ready for launching, we'll bring it to you in our segment on the commodities market on Thursdays during the week. So watch out for that. That would be another game changer to the commodities market, bringing more visibility, bringing more price discovery, bringing more transparency, and bringing more value to Nigeria's commodity exchange ecosystem. And that will be a wrap for the market review today. Join us for our discussions, reports, analysis, and including exclusive interviews on the Nigerian capital market. You can send your views and comments to news@proexchange.com. Also log on to www.proexchange.com to watch our videos with our news reports and analysis. To all our investors and the public this period, please beware of online platforms that promise you 100 to 200% returns and are not registered or regulated by the Securities and Exchange Commission. Do not give in to their schemes and strategies because they're out to rip you off your hard-earned savings. That'll be all for this edition. Let's make it an interesting conversation tomorrow as we wrap up the week. Thank you for watching. Have a nice day and stay safe.